Joining me now for some more perspective on these latest rescue efforts and what's going on in the world's markets, Brad Setser. He is a fellow at the Council on Foreign Relations here in New York. Brad, thanks very much for being with us.
My pleasure.
Give us a kind of sense of historical perspective here as far as the extraordinary steps that have been taken these past few days to try to rescue the banks around the world.
Well, I think they are truly historic and truly extraordinary. Only a couple of weeks ago, it seemed, the U.S. government announced a program of $700 billion to buy the bad assets off the U.S. banks' balance sheets. And over the past several days, the Europeans have one-upped that, committing over $1 trillion to backstop their banks, and doing so in a way that has more power by buying directly equity stakes in their banks.
Well, the world markets seem to have liked what they've seen, what they've heard. Is this a short-term turnaround here, what they sometimes call a dead cat bounce, or do we think it's more of a long-term?
I certainly don't think it's a long-term turn, and I don't even think we can fully evaluate its short-term impact until the credit markets open tomorrow, until we start to see signs that banks are beginning to lend to each other, until we see evidence that individual investors are still willing to keep their money in money market funds, and until we see evidence that companies that have relied on selling short-term bonds to raise money for their operations can continue to do so. Ultimately, this is a credit crisis, and we need to look at the credit market to see where the equity markets, the stock markets are going to go.
Are you in favor of a stimulus package, a second one?
I am. I think that what we've seen so far is just a series of policies designed to keep the financial system from something close to collapse, several big institutions failing at the same point in time. Hopefully that effort will succeed, but that effort alone isn't going to generate the kind of economic activity that we need next year. On current trajectory, most economists think the U.S. and the European economies will shrink quite substantially. Even if a stimulus program is adopted, absent that stimulus, it could be an even bigger fall.
Brad Setser with the Council on Foreign Relations, thank you very much.
My pleasure.